All right, hello. Welcome to a Real Stocks live stream. Haven't really done this before, but going to do this today. Hello, everybody. And I do have live chat pulled in the top, so please do chat. Please feel free to chat. This thing pretty much only works when you guys work. What's up, Eli? Miracle? Nah, not really miracle. Just me trying to facilitate things, make things a little better. So, put the content out there. And so that's why we're doing that. So, what's up, Eli? What are you looking at this morning? I know you're talking about Tesla yesterday. Let's change my setup on these charts. Let's go to 4. Let's go to 4. That way we can see things better. And I've got 2 screens up here. You guys can't see the other screen. So let's let me pull up my other screen, and I need to make a real stocks list as well. Futures are down. Yeah, we're in a, let's check out the ES. Yeah, so I kind of view the market in three views. There's some more out there. I really haven't laid out this system, but kind of like a support. Well, there's like support days, distribution days. I call them nothing days, and I guess breakout days or breakdown days. So I guess there's a few classifications in terms, like you say, a wash day. You know what I mean? Like we have these breakup days, like this day and this day right here. Then a lot of these are nothing days. And then we have like distribution days. So the ES yesterday looks like we're down about 0.5%. That's on the S&P. Let's go check it out. So, it's always good to start with the leading indexes. First live stream I'm done here, guys. Thanks for joining me. A couple people popped in here. And I'm going to read on my Etsy. Yeah, it wasn't doing so hot. Everything kind of failed with that most recent market pull down. I was looking at Etsy here. This thing pulled back down to the 50 days. So far, bouncing on the 50-day is good. Earnings in, looks like the 6th. So just in about aftermarket. So 2 trading days. So 2 trading days after market hours. So we'll see what kind of happens there. But, that may gap up. It may gap down. This is actually... What's up, Nick? How you doing? I would actually avoid Etsy, Eli. This could become a gap, what's called an island bottom, where you end up with, a literal island of price action. Could become an island top, which is negative for Etsy. But let's go this and let's check it out on the weekly. Man, the weekly at Etsy looks really good. It's sometimes really difficult to see price action like this and have it create an island top. It is fully possible. Don't get it twisted. It is fully possible. The one thing here kind of saving Etsy, not really saving it. One thing that I like about this Etsy chart is that this is the ICO or IPO high right here, and then we finally broke above it, and in nice fashion, really good volume sitting at a high level. Hopefully earnings can create a continuation rather than a reversal. Putting in this island top, hopefully that doesn't occur. So we're kind of hoping for this in Twitter. What I mean is the reversion back to the IPO high level right there. So far Twitter living down right here. We'll see if we get a massive reversal. I kind of doubt it, but we'll have to wait and see. Yeah, I wouldn't do anything, Eli. I would sit. I would sit. Our job in these markets, unless you have a specific strategy for trading around earnings, like maybe some kind of crazy option strategy, I really would just avoid earnings. Now, if you've been in Etsy down here since 15, maybe $20, I don't really mind if you hold through earnings. You've already done it a couple of times, and you have a large profit. So in that regard, you could probably hold through Etsy earnings, but I really wouldn't arbitrarily be shorting. It's just not a good overall strategy. There's people that do have strategies around earnings, but it generally seems like gambling to me because you truly have no idea exactly which way it's going to go. Yeah, exactly. What's going on, Nick? You looking at anything specific in the market this morning? Let's check out. You can do saddle with options and sell losing leg. Yeah, straddle. So there's different strategies you can do with that. Now, some people will some people that are a lot more in depth with options than I am will have more advanced strategies like that. And hold on a second here. I was gonna post this out on my Twitter, which I haven't done yet, which is probably dumb to not do that. All right, see if that gets a couple more people in here. If you guys are in here and you do enjoy the content, please like the video. Please share. Please share the stream. This is the first stream I've done on my stocks channel, so let's keep that momentum going, or get some momentum going. Yeah, when chat is slow. Yep, I'm gonna have to figure something to fill out time. It's basically, I think, gonna be me going through a lot of charts and stocks, which is fine. I probably will also be adding to my stock list. Unfortunately, I can't stream two screens simultaneously. Excuse me. So one thing. So I'll check in Investors Business Daily. They have uptrend under pressure, which is actually not good. So let's. I'll bring this over. So if I end up going through a bunch of stocks, I'm going to have to move this screen off of my screen. They've got markets under pressure here, so let's check out that. I'll probably have to sign back in. Oh, no, they'll let me in. Cool. So let's see what the distribution count is right now. The general market indicator, they changed this screen. Assuming this will go to the same. Oh, there we go. Okay, where is it? Where is it? Oh, they take you to the paper? Douchebags. I don't want to look at the damn paper. Although these industry groups right here, this is an important section. Unfortunately, this is listed weekly. It used to be daily. It's now weekly. So this is sometimes lagging information. So what this screen is right here, for those of you not really affiliated with, this is IBD's top 40 groups within the past 6 months. The days best are blue, the days worst are red. Now this is days. I don't think this gets updated every single day. Today being the 2nd, and oh, okay. So they did update it. Okay, cool. So this was from yesterday, right? Yeah, Wednesday, August 1st. Fantastic. So here we can see the week's ranking, the group rankings this week, 3 weeks ago, 6 weeks ago. So you can kind of get a general trend of where money is flowing. Now, probably I think the biggest one would be from 3 weeks ago to this week, considering the recent market action we've had. You can kind of see where things have been moving to in terms of money supply. So you've got retail, wholesale office supply, or office supplies, which, as you can see here, went from 25th to 1st, which is pretty cool. And we got medical going from 11th to 2nd, retail, wholesale going from 17th to 3rd. So they've actually been piling into looks like retail and medical and software, computer software, ENTR, whatever that is. I'll have to figure that out. Consumer service, education, real estate, and they don't show distribution days anymore. B- on accumulation distribution on the S&P, C on the NASDAQ. We've obviously seen more distribution in the NASDAQ, and some secondary indicators, puts and calls. So contrary indicator here in the mutual fund index. So not quite what I was looking for. What I was looking for is their actual distribution day count. If they took it off altogether, then that's horrible. Then I may have to do my own. Let's, well, crap. Okay, so let's go do our own analysis of distribution days. Let's go ahead and make that happen. 6 minutes to the open. We'll see what goes on there. So let's look at the NASDAQ. The problem is that IBD has their own. IBD has their own. Okay, we do get volume here on the NDX. IBD has their own thing for the NYSE. I don't believe I can even get volume on the NYSE. I can't. Okay, yeah, I understand. Take your big stupid window away. NYSE. Can't find this symbol. What is your deal? Fine. NYSE FANG. They have a FANG index? That's hilarious. Everything gets its own index these days. Advanced Issues Composite Index. Okay. Well, let's just do it on the NASDAQ. Okay, so a distribution day is a day that's down at least 0.2% on increasing volume. So this would be a distribution day. That would be a distribution day. And on increasing volume. So this would not be a distribution day. Neither of these 2 days technically would be distribution days. This day would be down. Oh, I'm in circle. 0.5, 0.4%. So technically this would also be distribution day. Flat up. This was not on higher volume, not a distribution day. This definitely is a distribution day. This is not. So 3 distribution days. Look for the next high volume day right here. That's definitely distribution day. 4 distribution days. This is not a distribution day. This is not a distribution day. .46, 0.38. I need to double check on that 0.2%. Because if so, there's a ton of distribution days in here. That potentially is a distribution day. Yeah, so distribution day, Eli, this is an indicator for indexes, not an indicator for individual stocks. A distribution day is where you're noticing key selling in the indexes, okay? So if you remember in crypto, we talked about a broad market rally. A distribution day is indicative of a broad market sell-off. The problem with the stock market is that they can hide their selling. They have tricks to hide the selling, and a distribution day is a way to identify when they do that mass selling. is pretty much what it is. So you've got a mutual fund with billions of dollars, right? And they want to take profits. Well, they can't do that all in one day. It takes many days, many weeks, many months in order for them to distribute these positions. And a distribution day on the index is a good indication of them, liquidating positions. All right, that's a good. It's just a good indication of them liquidating positions. Now it takes a certain number of distribution days to technically put the market into a correction, and that number changes. It used to be 3 to 4. Now it's, I believe, like 6 to 8, somewhere in there. Distribution days to put the market into a correction, and then one distribution day before. So like let's say the market's really weak, but holding up but looking weak. Maybe you'll give it 8 distribution days. On the 7th distribution day, the market will go into an uptrend under pressure. So basically, they're looking for the market to break right here, and they're not waiting for it, but they're just kind of looking for it. So, not a distribution day. This would also be a distribution day. 1, 2, 3, 4, 5, 6, 7. That high volume day, not down more than 0.2%. Let's see what their definition these days of a distribution day is, because it changes. And they have algorithms that perform that do these things. Distribution day. So okay, they don't have it up there. Should be in there. So what I'm doing now, ladies and gentlemen, I'm just trying to get everyone up to speed with kind of how I work. I trade a variation on Investors Business Daily's CAN-SLIM methodology. So do a lot of people, actually. Quite a few people do. I'm trying to figure out the exact definition of their distribution days these days, because it does change. Now, distribution days actually get invalidated in 2 ways. They get invalidated by time. So if a distribution day is over 13 weeks old, it's no longer a valid distribution day. It also gets invalidated by new highs in the market. That's about it, if I'm recalling correctly. Doing this off of memory, actually. So 13 times 5 would be 65 days. So our last distribution day here, whoops, that's the wrong one. You want to go back 65 days. Okay, 65 bars right there. So these are the valid distribution days. The problem here is that we've been moving into all-time highs. And so on the NASDAQ, this would be all-time highs. So we're pretty much only looking at these distribution days. One, two, three, 4, 5. 1, 2, 3, 4, 5, 6, 7. So that's why the uptrend's under pressure, is due to the fact that we're so high up in the marketplace, and so let's just call it 7 distribution days on the NASDAQ. And we'll have to do the S&P later. So let's take a peek here at what's going on with the market. So when the market opens, you typically have about 30 minutes for the institutions to kind of toy with you. And so Facebook not looking very bueno here. The past week or so, ever since earnings came out. Not good. I'm assuming Twitter's going to be in lockstep with them. They're selling off, so Twitter's not looking good. What is looking good today so far? So here's my watch list. This watch list is new and old. Probably doesn't have enough of the new market leaders, to be quite honest with you. Let's move that over here and get to the Now we start going through some charts. All right, so we got Trimble up 9% there today. Looking at the weekly chart on Trimble, coming down off of a low area. Looks like it's starting to form the right side of a base, down about 30%. So this could be a decent cup with handle off of earnings when it's all said and done. Looking at Trimble here on the weekly, we can see that in an uptrend, and it looks like it had a 1, 2, 3, 4, 5. Looks like a base right here that failed. Resetting the base count. This would be Trimble resetting the base count. Anytime that you undercut a previous base. So I'm on a weekly chart. Any base takes between 5 and 7 weeks at a minimum, depending on the base style. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 week base. Then it rallied and then failed here. And so this undercutting this prior base resets the base count. Now this would be a stage 1 base at this moment in time. And the stage 1 bases are usually the best. Stage 1 and stage 2 level bases are the ones that typically work the best. Trimble here coming off of, must have had really good earnings. So let's kind of check out the live news there on Trimble. Revenue, blah, blah, blah. EPS 43 versus 47 versus 44. Sales higher than estimated. Okay, so they're going off of sales for Trimble, so that's cool. So sales are pretty good in Trimble there. We got TTMI, which is up almost 9% today. Pretty big cup with handle there forming on TTMI. Let's kind of put that on our radar. All right, TTMI, cup with handle, volume decelerating in the handle, which is healthy. Increasing volume in the right side of the cup, which is nice. It's not a very well-formed cup, but that's the kind of base you're getting. I'm assuming this is going to be a pretty deep cup, though. Nope, 35%, a little out of range. You'd like a cup to remain at about 33%, but that's not too bad at 35%. Not a lot of accumulation, though. If we look at the right side of the base, it's not too bad. It's not too bad. A big high volume day coming off of the bottom, and then week, and then we have 1, 2, 3, 4 taking us up. A lower volume in the handle, and then so your technical buy area right here is 10 cents over the high, so 19.72. That would be your technical buy area for TTMI. That would be your technical buy area there. And then let's take a look at FOXF on the weekly, way overextended so far. So here's a reset of the base count. Basically a huge cup base on Fox. I had it in the channel here. Actually failed to act, and then it had a huge rally. And then so far we're up here. Earnings. Okay, so that's good. And we got Tesla here, 324. So popping higher after earnings. Not much to do when Tesla's still really stuck within a range. We got FOXF, whatever GPN is. Not sure what GPN is. So that's on a weekly. That's an interesting chart. Global payments. It did have earnings, it looked like. Probably not much of a market leader, seeing how it's not really doing much. GPN. Let's go to... I'm going to look at GPN up on... IBD. GPN. Alright, so going through IBD stuff here, we got GPN at there we go, 85 composite rating. Visa, MasterCard, 33% last quarter EPS. Debt to equity ratio, that's good. Green is good. 1 million average volume, no accumulation distribution. price action at 62. That's fairly interesting. We got Ruger moving. We got GMed moving. We got, there's Massey. So there's a nice cup with handle in Massey, actually. That's a very nice cup with handle in Massey. So here's our prior high, and technically this would be our breakout point. So we've already broken out here today, up 4%. This is pretty good. This is probably an actual trade here, guys, on Massey. Volume is pretty good so far. This is going to be a high volume day. If we can maintain above this trend line right here, that will be good. The EPS over the past several quarters really hasn't accelerated that much. So not quite how much, not sure how big of a leader Massey is right now. Let's take a look at the rankings on Massey. So it's a 90 composite rating stock, and it's actually pulling back. 90 composite rating, 33% EPS growth. This probably does not reflect today's earnings, by the way. They'll assimilate it overnight. 25% pre-tax margin, 23% ROE is good. Debt's good, zero debt, that's fantastic. D plus accumulation distribution rating, that is, they have it as a green, but that's generally not very good. 71 relative strength rating. This has to do with what the stock does during versus the S&P. So it's trading better than 71% of the stocks in the market. Unfortunately, we would like to see that in the or at least over 85. At least over 85. So most of the best ranking stocks, or I'm sorry, the best performing stocks start with a RSI over 85. So now this is a swing trading methodology, so this would not be for super active traders. But Massey here, not looking too bad if it can regain that breakout point right there. I don't like the failure of the breakout point so far. And we got here. Let's see what here's doing. So here rallying. When does here have earnings? So far here reversing quite substantially today. But you can see here that here has had a history of reversals. One here, reversal here, reversal here, even on yesterday. Open here, went down here, came up here, closed here. Reversal today, getting back towards highs up here. So that is possibly, we'll see what happens there. The volume here, 342 versus 1725, a little heavy on the reversal there, but you can see it's reversing again. Like I said, you get about 30 minutes in the morning for the market to kind of play tricks on you. So Paycom yesterday, I don't know why I ignored this buy signal, but I did. There was my buy point. It opened there, and for some reason, I know why. I was getting ready for the zoo with the kids, but I missed out on a really good trade there on Pay. I've been eyeballing Pay for a while, and it is a leading stock, and it went off to the races right there. So my potential target in Pay is about the 138 level, about $10 higher from here would be a good place to take profits in Pay, just due to general basing stuff, unless it looks super bullish. But that's a missed trade, a little too high to be actionable on. Actually, way too high to be actionable on. It's up 11%. You want to buy a stock within 5% of a buy point. I like to buy it on the buy point, but I will buy up to 5% if it's a very good quality stock. EQM driving lower. IDX, HTZ. Now, what's Now doing these days? So Now's kind of been in this general uptrend. It's been trading really tightly in a range here. Let me clear out all these other trend lines that I've got. So Now's been a pretty tight trading range. So this probably would be a good buy for anticipation for it to move up towards the top of the trading range. At some point, this trading range will fail. Can't say if it'll be up or down, but at some point it will fail. And very high volume at rent earnings. Let's check out what's going on here. So that's a big selling day. selling day. And then, so this must be earnings. 725 after market. So 726 would be the earnings response. So it's sold off here. Very interesting action. Very interesting action. So it looks like someone is taking profits up here. They're not really breaking the stock. It hasn't broken. The trend lines are still intact. I mean, anytime you get kind of a nothing move on earnings like that, don't get me wrong, it moved a little bit, but anytime you get a nothing move on earnings, that's pretty good to me, to be quite frank with you. Now, it is chopping around its 50-day moving average, so that's not necessarily such a healthy move, but it's still trending in the right direction. The fundamentals on Now, let's go check it out since it had earnings. Last time around, the earnings were spectacular in Now. Got us involved. This is a 99 rating in Now. 123% change last quarter. 108% 3 years EPS growth rate. 75% EPS estimated change for the current year. 46 ROE is ridiculous. 17 pre-tax margin could be better, especially for a software stock, but it's not too bad. 8 quarters of increasing fund ownership and a 91 relative strength rating. So accumulation distribution rating is a D minus though. For those of you unaffiliated with IBD stuff. Sorry, I forgot to pull it up here. So they rank everything, try to make it nice and easy for everyone, and it helps. But so you can see here, D minus is not a healthy accumulation distribution. I like to see things in a B or above, personally. Estimate revisions were lower, which is, not super hunky-dory, but lower from what was a spectacular earnings. So you're going to go from spectacular to great. So not quite sure how dead the stock's going to be. But it's lots of green. 123% EPS change last quarter. And the last 3 quarters was 83%. And so earnings acceleration has reduced a little bit. This was triple digits last quarter. EPS estimated change current quarter is 55. Earnings surprise 14%. So 3 consecutive years of annual EPS growth rate. Spectacular fundamentals here. Sales change last quarter is 41%. That's really great. So fundamentally Now is still good, still healthy. Still could potentially play it for a bounce here in this channel. But I'll probably wait until it gets above the 180.56 level. Probably above this high from yesterday. 180.62 is the high. So if it can get over this high from yesterday, maybe trade it for the bounce right there. I wouldn't arbitrarily get in. I would kind of wait for it to get you in. But high volume here around earnings. You can see the past 3 earnings period, and then not much in between. This choppy period here. Look at this one. Here's your earnings day here, and then it came down lower, then rallied higher. So you can't always take the immediate reaction to earnings as the full truth. It could just be them liquidating some positions as other people come into the picture. Because keep in mind, guys, the stock market is. What's up, Heidi? How you doing? The stock market is very broad in terms of who invests in the stock market. It's not like cryptocurrencies where all you have to go off of is the charts. The stock market is very, very wide and deep, and fundamentals play a tremendous part in stocks. And not everything with great fundamentals doesn't move. In other words, something can have garbage fundamentals and still move, but it's you can have much more confidence in your investments, and you can stay in them for much longer when you know that you're in a good fundamentally sound stock. So what are you looking at today, Heidi? What are you just here just to check things out, or do you have investments that you're currently thinking about taking on or looking at, or just just curious who's checking out the chat room. But yeah, so we can see now here potentially with an 8 to 10% move here in the next couple of weeks, probably potentially moving up there. So I generally enjoy the Now stock. It's pretty cool. TWU. Oh, I was looking at it and then it broke this trend line. Now I'm completely done with this stock. Let's go back and see what's kind of moved up. Sometimes things move pretty quickly during the day. We've got TTMI gapping up there on earnings. So So living above here so far is healthier. So we talked about this on the weekly chart here a little bit ago, if I remember correctly. Oh, no, I don't want to delete. Okay, so there's this large kind of cup with handle in TTMI. Although it may technically not be a cup with handle if I do some more in-depth analysis. No, it's probably still a cup with handle. Oh, my kids are up. I think we're going to get a visitor here in a moment. Hello? Hold on, I'm going to let them know where I am. What's up, Roxy? Hello, who's that? Ethan? Where's the 3-year-old? Oh, never mind. I'm doing a live stream, buddy. Do you need anything? Okay. All right, got a kid wandering. Do I see topping action in tech stocks? So I see there is some topping action in some tech stocks and in non-topping action in other tech stocks. So obviously Apple does not have topping action, while Twitter does have some topping action. So does Facebook, and Amazon, I believe, is okay as well. So you have a tale of two tapes here, right? You've got Apple, which is, unstoppable. It's literally unstoppable. Everyone is involved with Apple. It's going to go up forever. Just so you know, it's never going to stop. It's going to be the first quadrillion market cap company. And anyway, but no, Apple's looking really good. Big gap up on earnings. Coming back up here. I think its $1 trillion mark is coming up here pretty soon. Maybe it sells off on that $1 trillion mark. Who knows? It's at like 202.80, I think, is what it is. So it may already be a trillion market cap. Let's go take a look at FinViz. See what FinViz says about the market cap. $1 trillion $10 million. $1.010 billion is the market cap here on Apple. So it looks like it was 202.80, something like that, 202.45, whatever, who cares. But no, Apple's still marching higher. Performing extraordinarily well. Everyone's leaning into Apple. It's one of the safest bellwethers in the market. Where else are you going to get 30% earnings growth and 40% ROE? Oh, it looks like the EPS is, 30% earnings growth. Let me pull up FinViz here. So you've got, how is it only 61.9% institutionally owned? That is crazy. That is crazy. So 30% EPS growth quarter over quarter. 40% ROE is awesome. And it's just been gangbusters. If you're holding Apple going up, it's just been gangbusters. So what signal would make you short the NASDAQ? I won't short the NASDAQ, Roxy, probably. I just won't do it. The economy's too good to go shorting a major index. I don't believe that's a good strategy. I think that's a little more aggressive than I particularly want to play. Now, I mainly invest for my retirement account. So I have, and it doesn't mean they're longer term investments by any stretch. I pretty much trade options in my retirement account. But what I basically don't want to short the NASDAQ. There may be, if there's an extreme circumstance and if I feel there's a major downtrend coming, I may do something like that. But generally not really interested in shorting the NASDAQ. Now, keep in mind my default position is actually long the NASDAQ with the TQQQ, the triple ETF for going long the NASDAQ. This is my general cash position is this. Now, I will exit my TQQQ position if I do believe that we're going to go lower. But with Apple rocketing higher, it's going to be very difficult for the NASDAQ to really drop like a rock if Apple's rocketing higher. It's going to be really hard. and it's going to give the Nasdaq time. So if say Apple goes up here to 210, 220 over the next month or two, okay, and then you're going to have the other tech stocks and just other general stocks in the Nasdaq that are kind of languishing and doing their own thing. It may buoy the whole Nasdaq index just because of the huge market cap that Apple provides. So let's look at the top Nasdaq stocks. Let's see if that produces anything. Yeah, not yield. Top Nasdaq market cap stocks. You can do it by market cap? Okay, cool. So let's take a look at the top market cap companies here. So we've got Apple and Amazon is the top two. We've already seen here technically that they're very healthy. Right here, both of these are very healthy. Although the Nasdaq and the my chart here to the left here, the TQQQ they look pretty similar with this little mini bear flag right here. Then you've got Google. So Google's next. So Google may be topping a little bit here, very similar to Amazon, while Apple's rocketing. Microsoft, Facebook. Obviously, Facebook's been destroyed, but that's number 5, 6. Intel, Cisco. So Cisco coming to its 200-day moving average, maybe can get some support there. Comcast, with the worst stock symbol in the world, CMCSA. Okay, so now we're getting into market cap of 162 billion versus $1 trillion market cap here. And the Nasdaq, I believe, is market cap weighted. So those top 5 stocks, Amazon, Apple, Google. Oh, Google twice. That's funny. Amazon, Apple, Google. What? Oh, it's Class A and Class B shares, but they have a higher market cap. That's weird. Anyway, at least cumulatively between both of them, it'd be 17 billion or 1.7 trillion or 1,700 billion. Yeah, 1.7 trillion. Would keep me in there, but overall, I have a hard time believing that the Nasdaq is going to go into a deeper bear market from here with Apple and Amazon holding up pretty strong, and Google. Now, don't get me wrong, I don't like the fact that Facebook is cratered into the earth, but it's kind of its own story. It's not necessarily representative of the entire tech sector, okay? Now, Twitter and Facebook both being social media stocks. Keep in mind, Apple, Amazon, Google, Microsoft, not social media stocks. They're pretty much immune to what's happening here with Facebook and Twitter. So your social media is being basically obliterated because the earnings numbers recently have proven to be disingenuous due to the number of bots, and they're removing millions of accounts, which takes their general not their growth. I guess it takes their growth into question. It takes their growth into question, and if their growth is in question, then it basically means how well are they going to run their businesses going forward. And that is what I think you're seeing a lot of people take money off the table here. And so we'll see if these come back and rally. You see they're just kind of pausing here on declining volume, but no one's really trying to buy them back up, which is not good news. And ideally, we'd like to see these rally back up. But, yeah, I don't think that's the case, at least right now. I mean, we'll see what happens going forward. If you remember last time, this was the Facebook FUD right here last time. And you can see it stopped and paused and then started going back up. That's the best case scenario here, is that we stop, pause, and start going back up. But the volume here is much higher than it is right here. Yesterday's volume was pretty low, and that usually indicates that the trend may stay intact and we may just grind lower. So, could be dangerous going forward. Massey, cup with handle. Let's check it out, Eli. Check it out. So, there's I've got a trend line here in Massey, it looks like. And it had earnings, so that's good. Man, I like when earnings are done with. Yeah, beautiful cup with handle there in the weekly on Massey, absolutely. So this is a weekly, 1, 2, 3, 4, 5. So this is a flat base right here, and this will reset the base count on Massey. So technically, this would be a first stage breakout, possibly, or an initial breakout. But yeah, absolutely. In Massey, I think this is pretty nice. Let's look at Massey and double check its fundamentals, because you guys always have to take fundamentals into account. Always when you're dealing with stocks. If you're going to swing trade it for longer term, it's just, I don't know. To me, you just have to do it. I don't think there's another way. All right, let's check out Massey here. We've got industry group rank is 22, which is good. And we can probably see here the industry group rankings. Is this Monday's paper? Week of July. Okay, so it is Monday's paper. I don't actually want the paper. I want to see the... I'm going to have to bookmark this because it's in such a weird place. General market indicator charts. Okay, there we go. So industry group rank 22 is what it was. And it was 32nd 3 weeks ago. There we go. Wasn't it 22? Yeah, 22. And it is in the monitoring products, which includes circuit board, consumables, and reusables. Patient monitoring products. Okay, yeah, so 22 here. It was 32 and it was 25. So it dropped out of favor. Now it's coming back with the rotation out of Facebook. I mean, I guess it's just those couple of tech stocks. Okay, let's take a look at Massey. 90 composite rating, which is good. And it's ranked 6th in its industry, which is not the best, but if everything else is good, we can go with it there. So 33% last quarter, 36% average 3 quarters, 28% 3 years EPS growth rate, 25 pre-tax margin, 23 ROE, no debt, D plus accumulation distribution, not my favorite. And this is always not encouraging, actually. No change in funds owning stock. So that's not... What's up, Christina? So this right here, not necessarily the best in terms of... I really like it when you have increasing core... at least 2 or 3 change... percent change in funds owning stock was negative. Looks like some left. And then quarters of increasing fund ownership right there. Roxy, options trading is not difficult, but it's very risky. And I probably will do something on options one day. But it probably will be in a private setting, basically, where I can monitor how people are trading and behaving. It's just so risky. Like, it's just extraordinarily risky. It's really a way just to lose. So when we talk about risk in the stock market, we try to limit it to, in a cash position, about 8% would typically be your maximum risk you would be allowed to put on the table. But with options, that just flies out the window. You can't, I mean, if you buy and you sell immediately an option, you're automatically losing more than 8%. So it's an extraordinarily risky proposition. There's a lot that goes in, at least in my mind. Also keep in mind there's a million ways to trade options. I don't know all million ways. I have a certain strategy that I'm working, and I'm still developing. It's not completely, the rules aren't complete and concrete, but it's getting there. And it really needs, you really have to have... Yeah, it's really difficult. It's really difficult. But I mean, the rewards are fantastic if you can learn to work with it. So like I said, I probably will do it in more of a private environment where we can kind of monitor. And where people are going to take it seriously is what it is. You know, I don't want to teach people options and then here you go guys, go ahead, go play options. I think that's disingenuous, and you know, I really want people to be safe with their money, and so I want people to take it seriously that really want to learn. Like you need to take it seriously, like really seriously. So I will do it in time, but it'll be a private effort for sure. Okay, so let's get back to stuff here. So yeah, Massey looking okay. This is now that here's Massey. Massey's looking okay from a technical perspective. It looks really good. From a fundamental perspective, it could be better. So this may be the quarter where we start to see increasing percent change in funds owning stocks, and so that would be good. And we may, maybe we'll see the beginning of that here today off of these earnings reports. I don't quite necessarily know what it is, but if you do want to get involved in Massey, it's up 1.6%. You do have a little bit of time. I don't know how aggressively this is going to run, but typically you would anticipate a 20% move in a stock. And so if you consider this your breakout point, your 20% would be right about 123. So I'll write Massey down at 123 target. 123 target there. The volume so far today is okay. I wish it was healthier. It's okay. TTMI was the other one. Let's go double check on our TTMI. It's actually sold off quite significantly from its breakout point. So that is not healthy price action. If you have, so let's say you bought, let's say earnings were good, you bought up here. How do you handle that? Well, right now you basically give yourself a stop level, and like I said, you've got about an 8% maximum stop that at all times you would respect at all times, and that puts you back here at 18 and change, 18.12. So now you basically you would do one of two things. You would give it to the end of the day. Okay, because stocks really show their true color at the end of the day. So this could end up higher. Just because it's selling off now doesn't mean it can't reverse and end up higher. So you give it that respect to the end of the day since it did cross the breakout point. Well, the volume was looking healthy. So later on in the day, if it's looking unhealthy, like the breakout's going to fail, you can make a decision there. But ideally you would give it a little bit of time to play out. But if it does reach your 8% stop loss, you would be out irregardless. You would just be gone from this market. What's up, R. Pete? I talked a little bit about Apple. Yeah, they're just rocketing into the stratosphere, and it's never, ever going down. Something we joked about in 2013, as a matter of fact, that it was never going down. So, yeah, Apple doing really well here. We're kind of leaning into the space here, R. Pete. I'm trying to get a feel for. So we're starting the Real Stocks Power Hour, and I'm trying to get a feel for, who's going to be involved, who wants to be involved, and at what time. So I want to do it earlier in the day, and I really haven't even broadcast this publicly, which is really crappy for starting a service. Like I said, I'm a trader, not a marketer. Trimble 10%. Tesla still up, so that's good on Tesla, up 332. What did they say? What did Tesla actually say? I actually don't know. This was most thorough and insane conference call. That's funny. Tesla upgraded. So for you holders of Tesla, this is all good news. All right, so it'll take a minute for that to pop up. So I want to get that to pop. That looks like a good article. So we'll get that going there. So Apple number 4. Okay, so let's keep going here. You locked my performance. Okay, so here back up 5%. We looked at here earlier in the day, and here already popping back. Come on. Come on. Sometimes when I open up news articles, it just crashes Thinkorswim. I don't know why. I don't know why. It's all frozen. Pretty sure it's not my computer. Pretty sure. Yep, I'm still streaming, so that's good. RP, what did you want to? What did you want to talk about there with Apple? Okay, it just opened. It took that long for it to open. 6,000 Model S, Model 3 sedans by late August. Wall Street seizes on profitability promises. Shares of Tesla more 8% pre-market. Lost 718 million in the quarter, but I believe this was the second quarter. So this would have ended in, I don't know when their fiscal year is, to be honest with you. No idea. But yeah, supposedly they're going to be profitable in the third and the fourth quarter. More subdued on the conference call following results. Blah, blah, blah. Okay, stock does not need nor anticipates needing more capital. They're really looking for that. Even if Tesla doesn't make money, as long as they don't need more capital or don't raise more capital, I think the market will be happy with them. Second half of the year, Musk, rated the company will be profitable and cash flow positive. That's what we're looking to see. They should put that at the frickin' top. I don't want to read the rest of your article. So that's good. So that's really good. That's what everyone's kind of hoping to see. And 6,000 Model 3s would be fantastic if they can maintain that standard without killing people. And their capital expenditures will stay below. All I gotta say is this, guys: if Tesla can maintain the 5 to 10,000 or 5 to 6,000 cars a week and do it sustainably, that's going to be fantastic. They've learned so much going through that Model 3 thing. I mean, they learned a lot during the Model S, don't get me wrong, but from my understanding, they did a lot of things different with the Model 3. And I think they learned so much that by the time it comes to putting out new products, which they're always putting out new products, it's really going to benefit them going forward. So that's pretty cool. Pretty cool indeed. But yeah, Apple looking really good here. Really, I mean, this volume, you can't argue with that volume and that price bar. You just can't. They opened here, it dropped lower, they ate it up, and then it just rallied into new highs. So I would anticipate Apple just continuing to run. There's nothing unhealthy here in regards to Apple. Okay, so let's take a look at these leaders so far. So we got Fox. Let's go maximize this sell. So we got Fox all the way up here, sticking higher. We got Ruger, which has been coming back all throughout the day on earnings. Not quite sure what's going on there. 86 cents is really good versus 59, 53. Trimble, we talked about that. That looks like that's still maintaining its high level. And I'm going to go here in a little bit, ladies and gentlemen. Going to get the kids ready and get ready for the power hour in a couple hours. The crypto power hour in a couple hours. So Tesla, GPN, we noticed that the fundamentals on GPN weren't really there. Here up 4.6%. Remember I mentioned in here that it may reverse. It looks like it already has reversed. That's pretty healthy. Race, ooh, after a big, it looks like an earnings miss. A bounce here today. Not much to do there. Regeneron, ooh, bouncing on earnings today. This could be healthy. I'm on the daily chart. Okay, that's good. So Regeneron, let's go to the weekly chart. If we're getting these medical stocks are going to come back, guys, that's going to be super good. So 1, 2, 3. So not quite a flat base. Actually 3 weeks tight. How the hell did I miss that? Eli, that's our next software project, identifying 3 weeks tight patterns and pocket pivots. Yeah. So just breaking out of this is 3% up. Probably still buyable, almost out of a buy range. This is not a proper base, though. This is a 3 weeks tight pattern. This is a consolidation. How the hell did I miss that? Damn it. So probably stopping up here at 420 for sure. Oh, this is a weekly chart. Let's go back to the daily. Oh no, we're already above the 200 period moving average here. Okay, good. So yeah, Regeneron looking really good right here. I do like that. That would be on my short list, to be quite frank with you. There's no major base. A 3 weeks tight pass. So here's the situation right here, right now in Regeneron. You've got a low that's been put in, and we need to go back to the weekly to look at this. You've got a low that's been put in, undercutting all these prior levels. So this is like a brand new baby, okay? Brand new baby, brand spanking new. Smells like the, smells like the powder and everything. And then so now we have nice 1, 2, 3, 4, 5, 6 weeks of accumulation here, and then we have 3 weeks tight pattern happening here. Probably even a 4 weeks tight pattern. Yep, 4 weeks tight pattern right there, and then now a breakout from that pattern. So this is technically a continuation pattern. You probably could take a measured move off of this, doing something like that, taking you up to that 420 level. So 420 potential target for Regeneron. Okay, so that's kind of looking pretty good. That's why I want Stocks Power Hour to go through the list and check each chart and listen to your read. Cool. Yeah, love to get it going here. So Regeneron, we got GPN here. Race on the weekly. There's here on the weekly. Here's just gonna rock it up, guys. Here's not stopping. I'm sorry, they're not even waiting for earnings. They already know. They already know. So Massey looking pretty good here. Paycom continuing just a massive rally. Just continuing a massive rally, guys. These continue. These continue for a long time to come. Although technically it's way high to buy. You don't want to be adding or taking a position here. You want to wait for a pause of some kind of 3 weeks tight pattern, something like that. Pull back to the 50-day would be a good buy on Paycom, but on that volume, I'm not sure you're going to get it. So CBM here, weird pattern there, but in all-time highs off of, looks like pretty good earnings. CDW just rallying. THO. What's that? TMUS. T-Mobile. Looks like doing good things. Kind of a longer term, not necessarily a traditional chart pattern there, but definitely a huge consolidation. And I really like huge consolidations. Absolutely do I like huge consolidations. Now, not sure if we get another big run like this, but it's going to be a while before we come up and hit this trend line. But TMUS doing pretty good there. DBX was a Dropbox. Oh, this was Dropbox. Okay, recent IPO failed here at the IPO high. Here was your IPO breakout level, and then it reversed all the way in. So now you're waiting again. EQM rolling lower. WLL. Whiting Petroleum yesterday really breaking this trend line out of this whole bigger base. So got pretty much avoiding that right now. Generac. Yeah, there was a signal on Generac that I didn't take, and it chopped around quite a bit, but it looks like it's moving better so far. ANET is one I'm watching as well. ANET is one I'm watching. So, all right, guys, I'm gonna get out of here. I'll be back here tomorrow, pretty much between 6 and 6:15 a.m. And yeah, we'll do. I'll pretty much do live power hours for the stock market for the rest of this week. And then we'll see what happens come Monday. So need to go ahead and tell people about it. I don't think many people know what's out there. Just the guys in the Crypto Power Hour know that that's out there. But yeah, we'll see how that goes. All right, guys. Eli, talk to you later, guys. I will see you guys in the Crypto Power Hour in about 2 hours. And I'll see you guys tomorrow. Thanks for joining me.